Nigeria recording a sum of $6.7 billion as capital inflows from foreign countries in 2021, dropping by 31% compared to the $9.7 billion received in the previous year. This represents the lowest inflows recorded since 2016, and this was revealed in a capital importation report for the fourth quarter of 2021, published by the National Bureau of Statistics, NBS. According to the report, Nigeria attracted its lowest foreign inflows in 5 years since 2016, when its capital imported was stated at $5.12 billion. The Nigerian economy has been suffering from a forex crunch occasioned by a significant decline in foreign inflows, either in form of investment or remittances. Now let's take a look at the sectors with the highest inflows. Nigeria's banking sector attracted over $1.46 billion foreign inflows, representing 21.8% of the total inflows recorded in 2021. The manufacturing sector followed with $934.11 million inflows, which is 13.9% of the $6.7 billion foreign inflows recorded during the review period. Financing attracted $784.23 million, while turning was $645.59 million inflows, accounting for 9.6% of the total inflows by Nigeria. Now, if this trend of lower foreign inflows continue, these could add to the pressure already on the nation's external reserve. And then we turn our focus on Nigeria's capital inflow as it drops to $6.7 billion in 2021, lowest in 5 years. And joining me to discuss this is Mukhtar Mohammed. He is an international finance and economics analyst, stockbroker, personal finance coach, budget planner, and advocate of financial freedom. He would be analyzing this with me on the show this morning. Thank you so much for joining us on Business Breakfast.
So much, my pleasure.
Now, looking at this report by the National Bureau of Statistics, foreign direct investment in Nigeria was stated at $698.78 million, which is 32% lower than the $1.03 billion recorded in the preceding year. And then we see that foreign portfolio investment also fell to its lowest level in 5 years at $3.39 billion, dropping by 34.1%. compared to the $5.14 billion recorded in 2020. What would you attribute all of this decline to?
Well, you almost said it in your introduction. You did say it. I think the major cause of this decline has to do with the exchange rate volatility, especially the difference between the parallel market and the government-owned control market, or the private sector official market, the import-export market. I think the difference is very wide. And again, we've not been able to create a two-way repatriation of funds system, because if you watch a lot of companies that are doing business in Nigeria that want to repatriate their money back to the country in dollars have not been able to repatriate, especially the aviation sector. So it's a challenge that has been on for a while. I'm not surprising about the numbers that came in. I remember that before now we are attracting mostly foreign portfolio investors, and that number has shrunk because of, like I said, the two-way exchange system that has to do with the stock exchange. It's not that the fundamentals of these companies that are listed in the exchange have been anything less, rather they've been better. But the two-way exchange system has not been good, especially for foreign portfolio investors. And if you don't have foreign portfolio investors, you are not looking forward to have foreign direct investors. So if you, by your figure you read out, you see that the financial sector attracts more of this funding, but most of them that came in from the financial sector has to do with maybe credit facility to some of these banks, also has to do with foreign portfolio investors, those that are still coming into the market. But when you talk about direct portfolio and direct investment, it has not been there. As the last time the Nigerian Bureau of Statistics was falling down to almost 80% in terms of foreign direct investors that are coming into the country.
Now, looking at the sectors that actually had the highest inflows, we saw the banking sector attracting over $1.46 billion foreign inflows, representing 21.8% of the total inflows recorded in 2021, and then that was followed by the manufacturing sector recording $934.1 million inflows. That is, of course, 13.9% of the $6.7 billion foreign inflows, and then followed by financing, which attracted $784.2 million. Now, many analysts have attributed this to the current spate of insecurity in the country. Do you agree with this?
Well, he has a role to play, but definitely, if you're talking about agriculture, you're talking about food security, then he has a role to play. But when you look at the financial hub of Nigeria, is Lagos and Abuja, and those places are relatively very safe. So yes, insecurity has to play a role in terms of the perception from the investor.
Mr. Mukhtar. Okay, looks like we've lost audio connection with you. Would try to reconnect and then continue the conversation. But of course, we're still talking about the recent release, the figures released by the National Bureau of Statistics, talking about the fact that capital inflow reduced in 2021. Mr. Mukhtar Mohammed.
Yeah, I can hear you clearly.
Thank you so much for joining us again. Yeah, so we're talking about the sectors that performed highly when it comes to foreign direct investment. And you were talking about Lagos and Abuja being relatively secure, and that contributed to the fact that they had more investment.
Yes, that's what I'm saying. They do have more investment, but again, perception matters. Perception has to do that, okay, you are not coming to do business only in Lagos and Abuja. You may want to spread to other parts of the country. And again, when you begin to see, you always think that insecurity can easily spread from one part of the country to another. So that is the perception that they have. But looking at those places that they want to really come to do their business, there's not so much of a challenge there. But again, like we say, security is something that can just be, it can spread from one part to another fast than what you ever think of, because we've seen that happen now. It used to be Maiduguri, it used to be Yobe, but now it seems to be Niger and Kaduna. So those also does not give investors so much confidence. It played a role, but not necessarily. Lastly, I think the basic problem with foreign investors not coming to Nigeria has to do with our exchange rate. It has not been variable for them as far as they are concerned. They still think that the naira should be further devalued and also reduce the gap between the parallel and the government on the market.
But let's also consider these sectors that performed fairly well, the banking sector and the manufacturing sector. What do you think is responsible for this relatively fair, good, let's just say the fact that they performed better than the other sectors?
Yeah, you must realize that Nigerian banks have also expanded to the shop outside the shop of this country, especially the big banks. So most of those funds, in terms of revenue from those places, income from those places, definitely comes back, especially because we've seen the bank doing their year end. Also, you could see banks like Access Bank, UBA, Zenith Bank, and even First Bank. All of them have offshore branches. And so these branches that are making those profit and they are repatriating them into Nigeria. It's not necessarily that investors really came into those sector, but they have expanded to the shop, outside the shop of this country. So that's what was responsible. For the manufacturing sector, I think basically the challenge is still there. And again, if you look at some of those manufacturing sectors, what they are attracting has to do also with some of the international funding for growth of particular sector in Nigeria.
Okay, but there's also the insinuation or talks that Nigeria is also suffering from double-digit inflationary pressure, exchange rate volatility, and just recently the energy crisis, of course, which has seen the price of diesel hit record highs, resulting in a significant surge in the cost of transportation and services. Help us break this down, especially talking about the surge in energy and the fact that we have seen the double-digit inflation on the rise.
Definitely, I don't think it will change. It might even get worse over the month unless something drastic happens. Especially, remember that we don't have control over what is happening now. It's as a result of the Russia-Ukraine crisis. So we don't have control over it unless the ceasefire comes in, and then we see some other
or we build our refineries.
Issues. Well, you don't build refineries. The government, in order to build any refinery, the government is believing that Dangote refinery, which is going to be the largest in the world, is the game changer for Nigerian economy and for the refinery. So we'll wait and see how that plans out. But remember that you say high cost of production. There are always three things that when you look about inflation, there's a micro-inflation that has to do with the microeconomy inflation. There's also the market-determined inflation that has to, and there has to do with cost of production. Unfortunately for us, microeconomic inflation is high, market demand inflation is high, and then
Mr. Mohammed. Okay, we'll try to reconnect with him, and the conversation continues talking about the recent release by the NBS talking about reduction in capital inflows in Nigeria. And we've talked about the sectors that actually performed high, talking about Nigeria's banking sector attracting over $1.46 billion foreign inflows, and followed by the manufacturing sector. And then that also talking about the financing sector, which attracted $784.23 million, and then turning with $645.9 million inflows, accounting for 9.6% of the total inflows by Nigeria. By Nigeria, yes. And okay, Mr. Mukhtar Mohammed.
Yes, I'm here.
Thank you for joining us again. So sorry for the disruptions, but you were talking about the capital inflows.
Yeah, I was talking about the capital inflows as by inflation, and I'm saying that unfortunately we are suffering from the three types of inflation: cost inflation, market determined inflation, and economic determined inflation. All are in the high side. So that's why we are seeing the inflation figures go up and the cost of goods and services going up. We'll definitely see those continue even going forward, because we won't see a reduction in cost of production. Like you said, diesel price has gone up, and 90% of this manufacturing sector depend on diesel for their production. Then also you market microeconomy is not looking anything good, and then the demand and supply is still there for day-to-day household item that Nigerians definitely need, and most of these household items are not what we produce here. We have to depend on bringing it from outside the shore of this country. That's where we import them, and again, then you see that's where the exchange rate volatility, we call the high exchange in terms of the value, the height of the exchange rate.
Now let's look at the fact that the report also reveals that 24 states in the country failed to attract any foreign investment last year, the whole of the year. These states are Adamawa, Bauchi, Bayelsa, Benue, Borno, Cross River, Ebonyi, Edo, Enugu, Gombe, Imo, Jigawa, Kaduna, Katsina, Kebbi, Kogi, Nasarawa, Niger, Ondo, Plateau, Sokoto, Taraba, Yobe, and Zamfara. And then also 10 out of the 24 states failed to attract foreign investment in the last 3 years. The states are Bayelsa, Ebonyi, Gombe, Jigawa, Kebbi, Kogi, Plateau, Taraba, Yobe, and Zamfara. Now, what are your thoughts on this? Because looking at these states that are listed here, you'd look at a state like Zamfara, for instance, that has gold. You would expect that there would be some form of mining that would attract foreign direct investment. What are your thoughts on this analysis by the report?
Well, for Zamfara, you must know that that gold is what is causing the insecurity in that area now. So you are not going to see foreign investor goes there. So that's where you see the effect of insecurity. And remember again, we must not forget that every resources every natural resources is owned by the federal government. No state government has the power to have any resources. So constitutionally, it's the federal government that still has those resources. When you look at those numbers from those states, you are not surprised because if you look at some of these states, you are not surprised. But the one you're really surprised about is when you see a state like Bayelsa State, an oil-producing state, that have not been able to attract foreign investors for a very long time. I think that is a shame to the government of Bayelsa State, because they still have oil there, and of course, it might not also be their own fault, because remember that we have the petroleum industry, FI industry bill that have been passed into law that was supposed to attract investors, but these bills have been suspended because of the issue that has to do with the payment of subsidy. But by and large, I still think even with that, Bayelsa is supposed to be attracting foreign investors, especially when oil is the gold mine or the cash cow of the Nigerian economy.
I was talking about Cross River too. The fact that Cross River is on this list, isn't that appalling? Mr. Mohammed.
Can you come again and say Cross River is on what?
Yes, Cross River is also part of this list. Isn't that shocking? That Cross River didn't attract any foreign direct investment in the whole of 2021.
Well, I'm not surprised about Cross River, because I don't think the current governor of Cross River State or the government of Cross River is as dynamic as the previous two governments that Cross River State has had, especially the first one, that is Donald Duke, that tried to build the Tinapa Game Reserve, tried to open up the Obudu Cattle Ranch and everything. But presently, I think, and also have the Carnival. But again, sometimes also when we see all this figure, we should not forget the fact that Cross River is supposed to be attract people to come for tourism, and because of the COVID-19 restriction that came into, you didn't see any foreigners traveling or any tourists coming into those spots to come for tourism, and so that could also be partly responsible. But again, the other main fact is that the government has not done enough to woo foreign investors into Cross River State.
Now, the Nigeria Export Promotion Council, the NEPC, is saddled with the responsibility to promote the development and diversification of Nigeria's export trade, and also assist in promoting the development of export-related industries in Nigeria. How well do you think they are doing in this regard, especially when it has to do with non-oil exports?
I think the challenge we have is an administrative challenge, and again, they need to do more. That and enlightenment, administrative bottleneck in terms of if you have to attract investors, if you have, you just look at the companies that they gave tax rebate, and you begin to ask yourself, they are not even giving us details of this company for us to see how much these companies having tax rebate are bringing into the economy. But rather, what we see is that the ones that are allowed the tax rebate are the ones that nation. And when you look at a company like FlexViewer, you begin to ask, one of the companies that have attracted foreign investment into Nigeria to the number of about $150 million at that during the pandemic, and yet that sort of company were not giving rebate to grow their and create more, being is a fintech tech.
Mr. Mohammed. Okay, yes, you were talking about the fact that the Nigeria Export Promotion Council is not doing enough. Of course, they've been saddled with the responsibility to generate foreign investment and ensure that exports has been boosted in Nigeria. But are they doing what they should be doing? That is the question. But we will take a break now. When we come back, the conversation continues, talking about the capital inflow into Nigeria, the reduction recorded in 2021. Please stay with us. Thank you so much for staying with us. You're still watching Business Breakfast, and our attention is on the report by the National Bureau of Statistics, NBS, talking about reduction in capital inflows in 2021. And Mr. Mukhtar Mohammed is still with us analyzing this issue. Mr. Mukhtar Mohammed, thank you so much for staying with us.
Thank you.
Now, you were analyzing the responsibility of the Nigeria Export Promotion Council, NEPC, just before the break. I'd like you to just continue and land on that thought.
I think there's too much bottlenecks, bottlenecks when it comes to attracting foreign investors into the country. I think they need to work on that. We need to get our act right. We need to create a system. We need to incentive, like the government tax as an avenue for getting revenue. Everybody is using tax as an avenue to attract investors into their country. And I think that is where the Nigeria Investment Promotion Council should be thinking of. How do we give tax rebate to companies that will genuinely come into Nigeria, grow our economy, create jobs, and have snowball effects all over us, all over every part of Nigeria. And I think that is what they should be working on. And they should also make it seamless, especially in the ease of doing business, especially when you're coming in with product. You could say that some of these things are not really their own, but they need to liaise with other arm of government to make sure that we have stability in terms of this attracting foreign investors into the country. I think definitely what we decline we are seeing in the Nigerian economy, especially, that has to do with this. We're not attracting enough foreign investors. Have to do because the council itself is not playing a major role, are not coming up with policy that will stimulate foreign investors to want to come into our country.
You also talked about the fact that these investors, that is the foreign investors, are discouraged or not encouraged by the fact that they want the Naira to be further devalued. Do you think that the Naira should be further devalued?
No, I don't think so. I think the Naira has suffered so much. We moved from 250 to 360 for a while, and then from 360 has moved to 4. Even that is in the import export windows, have moved to like 417, 420 sometime. I think that the Naira that should be the fair value of the Naira. But the challenge is that when you have a fair value of the Naira there, and then you have a parallel market that is in about 578, so they are looking at that as that's main problem. And that also has to do with that CBN has stopped being supplied to the Bureau de Change that used to satisfy some certain segments of the economy, and did not create windows for this segment of the economy that used to be serviced by the BVA, by this
Bureau de Change.
Bureau de Changes. Is not creating a platform for them to assess FX in any other ways than the normal way. And the bureaucracy involved in assessing FX also is a big challenge. Those kind of bureaucracy.
Well, yes, you're talking about the challenges faced by foreign direct investors who have complained about the fact that they want the Naira to be further devalued. Mr. Mukhtar Mohammed seems to be in disagreement with that, saying that the Naira has already suffered enough blows when it comes to devaluation, and that might not be a feasible solution to the current situation. Well, we'll try to reconnect with Mr. Mukhtar Mohammed, talking about why capital inflow reduced in Nigeria in 2021. Mr. Mukhtar Mohammed, are you with us now?
Yes, I'm still here.
Okay. So I'd like you to land on your thoughts before asking my next question.
Yes, I was saying that they need to do more. They need to do more.
Okay, let's look at ways by which the federal government can improve Nigeria's export capacity, so as to earn foreign exchange and also to meet our import bill obligations and bolster foreign reserve level.
Well, the CBN is already doing that with the RX 200 companies that will attract about 200 billion into the Nigerian economy in the long run for a 5 years program. But the challenge is that the CBN keep doing, the monetary side keep doing what they ought to do, the physical side are not doing their own. So that is generally the challenge that we have in the sector at the moment. So what did further, especially the physical side, they need to create that enabling environment that talk about the ease of doing business. They need to work on that to make sure that we have, then the monetary side need to look at the cost of funding, because if you are taking your goods out of the shore of this country and the cost of production, in terms of cost of production is high, cost of funds is high, then you are not able to compete favorable with other your counterparts that have cost of production low, cost of funding low. So they need to look at that. I think those are the two main things we need to do. We need to look at the ease of doing business. We need to see how can we seamlessly do our business from point A to point B. We need to go digital where everyone has gone these days. Then secondly, we need to begin to look at the cost of business in terms of cost, in terms of production. How can you help them reduce? How can you build more infrastructure? Then also the cost of funding, which has to do with microeconomy. How can the CBN come in like what they are doing, the RX 200? They do that. Can they also extend it to other sectors of the Nigerian economy? I think basically if we can do this, we'll get our act together.